Here's a little math word problem for you. There are 94 banks in Ukraine. 39 of them operate with foreign capital. If over the past 5 years, the share of foreign capital in the Ukrainian banking system has almost doubled, going up by almost 60%, then where does this leave Ukrainian confidence? Foreign banks that came to our market, whether they were Western or Russian, had their own goals. The Russians came here not so much to deal with the economy as to finance an information war against Ukraine. The Westerners came with the goal to extend credit for attention, that is, for its economy, through lending to Ukrainians who bought imported goods. According to the Ukrainian Association of Banks, there are 5 financial institutions with Russian roots in Ukraine. As of the end of 2016, these banks attracted almost $1.5 billion in deposits and issued loans worth almost $6 billion. That is, the Russian state gave these banks a resource for them to lend in Ukraine. And for what? Economic projects? Maybe. However, not only economic, but also political projects. Experts believe that the share of foreign capital in the Ukrainian banking system doesn't have to exceed 10%. However, practicing bankers are more loyal to their foreign colleagues. They don't see great danger in the presence of foreigners. On the contrary, they think that foreign capital could give a new push to developing the Ukrainian banking system. This creates additional competition that helps consumers to benefit from it. Therefore, interest rates will decrease and loans will become more affordable. However, it should be noted that deposits will become less profitable. I believe that the share of Ukrainian capital in the banking system will decrease, and significantly so. After some difficult times, Ukraine's financial market is emerging from the crisis. Banks are actively regaining the trust of depositors. According to 2016 results, institutions saw their deposit portfolios grow by 8.7%, and the rate of increase continues. However, as Mamedov says, this will soon make deposits less profitable. The increase in deposits of individuals probably surpasses our records. We monitor the statistics on the interest rates and see that banks have already reduced the interest rates twice in this month. If we started the year at 20% interest rates, so now it's 16 to 17%. High deposit rates give banks capital and guarantees against risk. Ukraine's national bank had strict requirements to increase banking capital. This practice led, some say, to market recovery. Now, there are almost no insolvent banks left in Ukraine. Last year, 23 financial institutions were withdrawn from the market because of issues with capital. Banks had a choice, either curtail this activity or attract the capital. They could not operate without capital. Following the growth of their resource bases, banks are now building up assets. And if earlier the main focus was put on retail, now priority is on lending to small and medium-sized businesses. It is necessary to provide loans to small and medium businesses in any direction, sphere, or industry. Exactly those businesses that want to develop. I believe that it is necessary to resume mortgage lending because now internally displaced persons have great problems. It is necessary to renew some leasing programs. I mean, all those programs that were operating in 2013. They're quite interesting and serious. All this will help launch the banking system all over again. As of today, according to financial experts, the priority task of Ukraine's national bank is changing its legislative framework. In particular, unlike individuals, business is not insured against losses in case of liquidation. Business has lost more than 500 billion hryvnia in liquidated banks over the past 3 years. There's no mechanism to insure the money from businesses. Bankers are calling 2017 the transitional year for solving these and other types of problems in Ukraine's financial system. And for 2018, experts expect solid growth in financial stability and profitability.